Alright guys, welcome back to the channel. For the new subscribers, thank you for subscribing. For the viewers, thank you for clicking this video. So in today's video guys, I am going to be breaking down how to trade forex with only price action, right? And when I say price action guys, I literally mean only price action. There is no indicators or anything like that, right? So when it comes to trading with only price action guys, you have to follow this 3-step system process, right? So the first step guys is going to be your technical analysis. So essentially guys, your technical analysis is very simple, right? It boils down to two things: understanding where to mark your area of interest, right? And then only using 3 time frames to not confuse yourself. And when I say area of interest guys, area of interest just basically means the demarcation between buyers and sellers. So as you can see on my chart right here guys, the white line represents the 1 hour time frame markup, as you can see on my top left corner, right? And then the blue represents the daily time frame markup, right? So these white lines are the area of interest, and essentially what that means is the demarcation between buyers and sellers. So in this case here guys, just clearly look, before any of this move played out, before any of these moves played out guys, I already had this marked up. And why did I have this marked up? It's very simple guys. Literally, as you can see, price tapped this zone, this zone, this zone, and then bought up, came back and then retested that same zone, broke past it, retested that same zone again, went back, closed, and respected this area of interest I did actually have, and then boom, this happened. So obviously this is where you would mark your area of interest. And then from there, as you can see, price did react perfectly of this area of interest. And then also here, as you can see again, price did the same thing, 1 2 3. That is the reason why I marked it up. And as you can see here again, same thing too. Price reacted here, price reacted here again, is broke past, right? Reacted again with this doji, and then with this candle here, came back, bought up again, and then I reacted again here, and then is looking to react probably from here again. So this is essentially what the area of interest is guys, and you have to learn how to mark this up because this can help you with your trading, right? So imagine if you're only taking trades from your area of interest guys, literally you'll be taking high probability setups. And then with the daily time frame, it's the same thing, right? So in the daily time frame, literally, right, as you can see, this was an area of interest here. So price tapped this zone, tapped this again, and as you can see, it reacted off this, right? So you have to learn how to mark up your area of interest. And then also guys, you only need 3 time frames, right? So for example, on the top left corner, right, I only have 3 time frames: the daily, the 1 hour, and the 5-minute time frame. And the reason for this is because guys, I just want to keep it simple at the end of the day, and you get to actually understand more of my strategy in this video as I explain more. But essentially guys, the daily time frame is literally just to look at the macro things, just to look at the overall point of view, what is happening, right? So for example, in my community I am following right now, we are anticipating price is looking to sell all the way down here to 180, right? So GBP is looking to sell, right? And then guys, that's for the daily time frame. And then the 1 hour time frame is literally to follow the day-to-day trend, right? So almost like a day trading thing, right? So essentially I'm following the market on a day-to-day basis. So the daily markup will likely stay forever, or will stay for like maybe a month or so, but then this markup, the 1 hour markup, right, will likely stay for like 2 days or 3 days or whatever, or a week, depending on how price moves. But that's essentially the first system, right? Now the second system is going to be your candlestick patterns, right? And when I say candlestick patterns guys, I don't mean things like, you know, head and shoulders, double top, or anything like that, bro. Now what I mean is actual candlestick patterns that give you signals for your entries, right? So by, for example, you know, this book here called the Candlestick Trading Bible, right, is literally like the best book I can recommend for you to understand, you know, how to, you know, trade candlestick patterns, right? So it gives you, you know, in-depth explanation. So for example guys, this pattern right here is called the bearish engulfing, right? And then this pattern right here is called the shooting star. So if you had that knowledge, you would know, okay, I want to sell from here, I want to sell from here, right? For example, this pattern here is called the tweezer bottom, right? Or you could call this a bullish engulfing, whichever one. This could be a bullish engulfing, but I would call this a tweezer bottom, right? And as you can see, if you see this pattern, that you know you're looking to buy, and then price just goes up there. So that's essentially what, you know, the Candlestick Trading Bible is going to explain. And as you can see, there's multiple different times, right? There's engulfing, there's doji, there's dragon. But the point is guys, I want you to read this book and then just to train your eyes on, you know, finding out the patterns whenever they present themselves. And guys, this book is not that long. It's literally only 167 pages. You can literally read this book in one day, honestly, right? And then guys, the last system is going to be the pivot points, right? This, I would say, is the most important part, right? Because when it comes to understanding pivot points, guys, this is what's going to separate you, right, from taking bad trades and understanding how to read the market, right? So this pivot point helps you identify what the low is and what the high is, or what the pivot low is and what the pivot high is. And this, if you can understand the pivot lows and pivot highs, it can help you know when a reversal happens, right? So like you guys know, I trade the strategy called the ICC concept, right? And if you don't know what the ICC concept is, it's very simple, right? This strategy only works when price is trending, and essentially it just basically means indication, correction, continuation, right? So I did actually make an ebook, right, explaining and breaking down how I traded the ICC concept. But essentially, guys, it just means indication. So assuming price is already trending up, right, we wait for price to give us an indication, right? Same thing here. So in this case here, price bought all the way up here, then retraced back to that level. So in this case, this would be your pivot high, right? So this is why you need to understand what pivot points are, right? So in this case, price comes, it gives us the indication, retraces back to that pivot high, which is called the correction. So in this case here, price did retrace, and then once it retraces, we wait for an entry, and then price now continues that trend, right? So now earlier I did remind you that pivot points, right, are used to figure out when a reversal occurs, right? So let's assume, you know, price was trending, you know what I mean, down. A reversal basically occurs when price is already in a downtrend, right? A reversal happens when price breaks and closes above the previous, right, above the previous pivot high. Once it breaks above the previous pivot high and then closes, that is a clear indication that price wants to go to the opposite direction, right? Now this is not concrete, but this is like a system that you can follow, right? I would say personally that this happens at least 60 to 80% of the time, right? So when price closes above the previous pivot high in a downtrend, that is an indication that price wants to reverse to the upside, right? And then we wait for price to then retrace back down, so which is called the correction, right? And then when price retraces back to that previous pivot high, we wait for a 1 hour entry, and then we then now take that trade to continue up, right, like this, right? So when price is trending, guys, you have to understand pivot points, right? You have to know what the pivot points are, right? Because it's going to help you with, you know, figuring out the reversal. Because sometimes, guys, like, let's remove this. Let's say price is already trending down, right? You might ask yourself, okay, how do we actually figure out the pivot highs and pivot lows? Because, you know, between here and here, right, price could have easily be doing something like this. So something like this, going up and down, going up and down, going up and down, right? And you might confuse yourself like, oh wait, okay, so what is the pivot, you know, high or whatever? Like, is it this high, is it this high, which high is it, right? So let me give you a clear example of how to identify your pivot high and pivot lows, right? So when it comes to identifying, guys, you have to understand this. I actually broke this down in my ebook, right? So let me break this down. Boom. So literally, guys, you can see price, as you can see, is trending up. Now, like I told you, a reversal happens when price breaks and closes below the previous, right? Not a low, but the previous low. So when price breaks and closes below the previous low, that is a sign that price wants to go to the downside. Now, when it comes to actually understanding what a low is, or what that pivot low and pivot high is, let me break this down for you. See, price has to give you at least 2 solid candles, right? So in this case here, right, price is trending up, right? This first blue arrow that I marked up here cannot be the low, because price does not have at least 2 solid sell candles, right, to create that arc, right, for the low. And when I say arc, I mean something like this, right? So when it comes to figuring out the low, I'm talking about this arc, right? So this arc here, like this, when it's something like this, right? This is what I mean by a trending market, right? This is the arc we're looking for. This arc here has to have at least 2 solid sell candles back to back, right? It has to be 2 solid sell candles. So in this case here, this arc is not complete. This arc is not complete, but this arc here is complete because it has at least 2 solid sell candles. So with that being said, guys, let's actually train ourselves, right? So for example here, right, boom, notice this. So here, right, price created a low, and when I say a low, guys, a low, I always use the body close. I do understand that a low basically just means the wick, but when it comes to how I trade, guys, the low just means the body close, right? So I actually use the body close, right, to create my lows, right? So this was the low right here, and this low was created by this high right here, right? Now notice how price was already trending down. So in this case here, price was already trending down. It's trend down, retraced, and then went back down again, right? So a reversal, like I told you, is basically price breaking the previous low. This cannot be the previous low, guys, because this low has to have like when it comes to figuring out the previous low, right? The previous low essentially, right, is going to be this right here. This is going to be the previous low. Why? Because if you look to the left or look to the right, no candlestick has broken or and closed below this low, right? Sure, the wick tried to, but guess what? It's still closed above this. So this is still a valid low. So price did come and then went and pushed up here. So this is kind of like a consolidating market here, because price is literally going between this high and then this low here. So it's probably doing like this. So in this case, it's doing something like this, right? But as you can see, notice how, boom, this is the previous high. This has to be the previous high, because price, right, did not close above this high here. As you can see, the wick did go back up, but it still closed below, right? So the reason I'm saying is because, as you can see, the price did, now finally close above the previous high, indicating price wants to change trend. But in this case here, price did not. Like I told you guys, it's not set in stone, right? So in this case here, the 20% of the time it went against us, right? And as you can see, price did go for that reversal. But the reason I'm pointing it out, guys, is because notice how price still respected what I am saying, right? So notice how, yes, price did give us like a sign that it wants to reverse, but obviously it did not reverse. It now like went and continued back down and then created a low, right? So now the pivot high, because price is in a downtrend, the pivot high now is going to be this. This is going to be the pivot high. Why? Because it has at least 2 solid buy candles, right? Because price is in a downtrend, right? This cannot be the high because it only has 1 candle. So notice how price did close above, but it still respected this. And then if you see that it respected this, you understand that price is still trending. So even though price did have this big push up, it still closed below this pivot high here, and then it now followed through. So if you see again, price now went and then created another new low. Now the next pivot high now is going to be this. Boom. So you see how you're following price right now. So price needs to break and close above this high for now the buy trend or the sell trend to turn into buys, essentially, right? So this how we're looking at this now. Notice again, price came, went up all the way here, sold back down. Notice this is still, now see, notice this is like a preview. This is a low right here because price did close below this, right? But this cannot be the pivot high. Why? Because price does not have 2 solid buy candles. Now you might say, oh, what about this? This is like a solid buy candle. You're right, but you have to look at it like this. This is how I look at it. I look at it like this. Boom. It's created a low and then broke past it and closed above this and then now created a low. So this cannot be valid, man. You feel me? So this high is higher than this high, and then if you look at the line chart, which will give you much more better explanation, right? So if you see the line chart, you can see that this was a dip, and then this dip now created a high. As you can see, if you do this high right here, boom, it's clearly higher than this, right? So this is clearly higher than this. So this is the arc right here. So if you were to pick an arc, right, this would be the arc that you would use in terms of identifying whether or not price needs to break there for us to say that, okay, yeah, price has changed trend. So in this case here, even though price did break above here and bought a little bit, price still maintained that sell momentum. Why? Because this is the actual pivot high that price needs to break. Now notice again, price now finally closed below here. Guess what? We're going to move that pivot to now this, right? So you see how we're now moving it. Now from there, price now sold and then now came back down again, sold here. Guess what? We're now moving the pivot to this. Why? Because it has at least 2 solid buy candles. Now see again, price now came, created another new low. Guess what? The pivot high is now this. So what do you understand by this now? So basically what this means is if price closes above this, that means price has changed trend to buys, and then we're expecting something like this, a retracement, or even something as deep as this, and then price now continues to buy up. And then guess what? If price still respects this high, then we're anticipating price will now sell from here and then give us like an entry, right? So in this case here, this would be the correction phase, right? So boom, if I go back to the markup I did here, so as you can see, this red bar is going to be the correction phase. So in this case, this would be the correction phase here. So if I was to bring this up, this, right, so this is the correction phase. So in this case, this is the correction phase looking to retrace to this area of interest and then either give us an entry, or what we might actually see is this. We might actually see price break trend, but give us a sell entry and then sell from here, right? Because understand again, this is the daily area of interest, and when it comes to the daily area of interest, guys, the daily, right, can give a really strong momentum. So in this case, notice how price reacting off this daily of interest is literally giving strong momentum, right? And then I do believe that price might actually give a fake out like this and then look like it wants to buy up, but then now reverse from here. So I do anticipate something like that happen. But to be honest, let's see how price does, because at the end of the day, we are reacting to the market. But yeah, guys, follow this 3-step system, guys, and you'll be able to, you know, trade Forex with only price action, right? Like I said, technical analysis, your candlestick patterns, and then your pivot points, right? So I hope you guys enjoyed this video, guys. If you do want to access this ebook, just click the link at the bottom of this video and access the ebook. Just submit your email and name, and then you receive the link. All right, I will see you in a different video. Peace.